Hello, everyone. I'm Barry Corcoran.
I'm Lawson Corcoran, and today is February 20th. This is another episode of Financially Speaking. So, today, February 20th, marks 1 month of a new administration. It's been quite a month so far, I would say.
It has. We've actually had lots of conversations with you about your fears and concerns with all the things that are going on in Washington.
Yeah, so that's where I'm actually want to begin with you is we have had quite a few people call in and just had some fears and concerns about what's going on with this new administration and just politics in general. There's just a lot of change, a lot going on. It seems like there's a lot of activity in Washington. My first question is, you've been doing this a very long time. You've seen a lot of administrations come and go. You've seen a lot of political changes through the years. Where does this fall on your radar as far as political change worth noting, I guess? And, you know, how many times have you seen this before? Talk to us about that.
Yeah. Well, this happens every time. Every time there's a new administration, every time there seems to be uncertainty, people have this reaction. And I promise you, no matter who wins the election or who controls Congress or the Senate or the House, we have concerns. Everybody has concerns about the uncertainty of how everything's going to unfold. But it didn't happen just with this election, although I do sense a lot of bitterness. But it doesn't happen just with this election. It happens with every election because people are reacting with their emotions rather than the information that matters in this area.
And I think we see that on both sides. I've talked to a lot of people my age, your age, just all over the map on both sides of the political aisle that are just, concerned. There's a lot of concern out there, a lot of fear, a lot of anxiety, a lot of unknown. There's a lot of happy people, a lot of frustrated people. I think everyone is just kind of filled with a lot of emotion. I think that's fair to say.
Yeah, for sure. And, from our point of view, because we've seen this over and over again, we try to keep emotions out of our decisions and our processes, and it's not about emotion. And when we look at historical trends, trying to keep your emotions out of your investment decision really pays off.
Yeah, I think that's a great point. A great point is, and that's really the first point I think we wanted to make to everyone is that politics do not directly correlate to markets as we see them so far.
Absolutely. And I think if you just go back from the last month or since the beginning of this year, or even back to November, right after the election, there are just some people who think that the world is coming to an end and the country is going to be changed in dramatic ways, and we're not going to be the same. And when we look at the financial markets, if that were the case, then you would see investors all over the world selling U.S. stocks and changing their portfolios and going to something else, whether that's cryptocurrency or gold or just cash and putting in a mayonnaise jar in the backyard, something that's secure. But when you go back and look at the information, that's really not the case at all.
Yeah, that's what I was just getting ready to share, and we can pull up this chart. But if you look at the stock market's performance since the beginning of the year, it's actually up 4.5%.
Yeah, and this is only the third week of February, and if it stays on that kind of track, it'll be have returns that are similar to what we had last year and the year before.
Yeah, and what I think is wild is if you would just poll a lot of people on the street that maybe don't really watch the markets like we do every day and kind of maybe they don't stay involved in that. And if you were to poll them and say, based on what you've heard in the news for the last month, last 3 months, even 4 months, even year, what would you say the stock market has done? Would you say it's down? There's a lot of negative sentiment out there. It seems like there's a lot of chaos going on in Washington. what would you say the stock market has done? I think a lot of people would say that it's, wow, it's probably been down and I don't have my money there because, things have been crazy. And to actually reflect on the data and see that, wow, it has really, really done well the last few months, especially in the last month or so, and since the beginning of the year.
Yeah.
I think that's a really important point.
Yeah.
And I think as you spoke on just a second ago, it's all about taking the emotions out of investing. Our emotions as humans and our biases really affect our decision making, obviously.
Yeah.
And when you step back and you kind of let things develop, I think that's something we really wanted to do going into this new year and the start of a new administration. We knew that this was all coming, and we wanted to say, let's take a look at the data. Let's let things develop. Things are moving very fast. Let's let things progress a little bit and see what happens and see where we're at. And so far, we're 1 month in, and things have actually turned out well.
Yeah, and what we're telling people who express their concerns is to just give this 3 months, 6 months, and see where we are. For clients who've worked with me for many years, you know that I am very frustrated with the financial pornography that you see on TV. And I get more and more frustrated as I watch all of the channels, doesn't matter which one they are. You have journalists who are expressing their opinions regarding the stock market and the economy, and they're journalists. And even PhDs in finance don't have the crystal ball to tell you what's going to unfold and where the stock market is going in the future. And so for those of us who spend time flipping from one channel to the other, listening to those talking heads about their opinion, which may be as about as valuable as anybody else's opinion. It's just pure speculation, and all it's doing is generating emotions that cause people to have some kind of a reaction. We're asking you to call us and let's talk so that you don't have these fears and concern. And the worst thing that you can do is say, I'm going to panic and sell everything and go to cash. And history tells us that's always a big mistake.
Yeah, that's actually a great next point. This chart we're going to pull up here, the value of staying invested. This just shows shortly after the global financial crisis, what would happen to $100,000 if you invested in the S&P 500 in different ways. You see the buy and hold investor, which we very much believe in. We don't want to sell during volatility, and we see that's outperformed everyone else that moved to cash. And you see some people that moved to cash just for a year after that. Obviously that was a very tough time, but we've seen volatility, similar to that since then. And moving to cash for just a year can, cause underperformance of over $400,000.
Yeah, the challenge about getting out in the midst of your concern is when to get back in. How much more does the market have to recover after a financial crisis, which we're not in currently at all? But how much more does it have to go up before your emotions are convinced that it's out of the woods and we're okay? And so when you do that, you miss probably the biggest moves that we see in the stock market. It happens time and time again. And so that's why we urge everybody to stick to your designed portfolio. We've already made the calculations for recessions and drawdowns in the market, which once again, we're not calling that, and this is not a crisis, but it's just another encouragement or a set of facts that you just don't sell and maintain your strategy, regardless of what's happening in the economy.
Yeah. We say it so much, but it's all about sticking to the plan. This is a lot of people are fearful of short-term volatility, and it's easy to get spooked by that, but it's all about sticking to the plan. And so just to recap some of the things we wrote down that we wanted to say flat out, one, just to recap, politics and the stock market there's not a one-to-one correlation, right?
No correlation.
There's not a one-to-one correlation. That's a super important point, is to keep emotions out of it.
Yeah.
Let's look at the math behind everything. Let's let things develop. Let's not act rashly and get wound up in anxiety or fear or happiness. That's both sides
Yeah.
of the coin.
Yep. You're
Um,
right.
let's stick to the plan. Let's stick to the investment policy that we put in place originally. Um, Second point, you shouldn't sell. Stay in the markets, right? Hold on, because so far we haven't even seen any volatility. That's kind of the point of us pulling up that chart of the S&P 500's performance so far this year. Is there hasn't been a negative performance. It's positive.
Right.
Things have done really, really well recently, and so let's continue to stay invested and ride that wave, right?
Right.
And then lastly, there's no. I think a lot of people are afraid of recession or signs of weakness in the overall U.S. economy, and they're afraid that policies in Washington are going to weaken the overall economy, and that's just simply not the case, as we've seen with the stock performance so far this year, but also GDP growth, and things are just beating out
Yeah.
expectations.
Yeah, the reality is what the stock market is focused on is the growth of corporate profits, are consumers buying things and buying cars and T-shirts and food, and so is the consumer buying these things, and the growth of the economy and changes in the interest rates, and those are the real facts that the stock market is actually focused on. They don't watch TV and see what these news commentators are saying about the stock market. It doesn't care.
Yeah. So I think just if you want to leave everyone with just one more piece of advice, just kind of give everybody a breath of fresh air and say, hey, you can breathe. Let's all breathe together. No,
Yeah.
the world's not falling apart. Like it's going to be okay. Things are going
Yeah.
well.
Yeah. Please just take a few moments and concentrate on separating your emotional and your currents. And we don't want to underemphasize the concerns that we have about social issues and the changes that are going on. Of course, those are real, but those are very, very different changes that don't relate to your investment. And we would hate for you to mess up your retirement nest egg or your retirement funds over emotions that don't have reality compared to investment and financial information that does have reality.
Correct. Yeah. And I think that's a great point to leave off of is, it's great to be human and care about, social issues. And that's important. Those are things that we need to focus on for sure as humans. But when it comes to the mathematics and the principles of investing,
Right.
that's a lot of that is based around hard data that doesn't have biases.
Right.
It's not based on something that someone says in Washington. There's a lot of math behind the investment principles, and I think it's like as you said several times so far, is it's important to keep that emotion out of it.
Yeah, so call us if you're concerned, but if you don't call us, stay calm. I'm Barry Corcoran.
I'm Lawson Corcoran, and this is Financially Speaking. Everyone stay warm out there and stay safe.